In addition, just note for all of you that you are in listen-only mode. There is, however, a Q&A box that you should find at the bottom of the webinar console. And I encourage all of you to ask questions as we go. Hopefully we'll have about 10 or 15 minutes at the end to run through some of the questions. Naeem will be answering some of them as we go, but mostly assembling them for the Q&A session at the end. So please do feel free to ask those questions as we go, and we'll just be gathering them up for the Q&A at the end. So with that, let's begin. Some of you are probably familiar with this report. This is, I believe, the 14th edition of this annual report. Others, though, may have just encountered it for the first time. And so for those that are new to Tracking the Sun, in a nutshell, this report aims to summarize kind of basic trends related to grid-connected distributed PV systems in the US. Initially, in the early years of the report, it was focused primarily on installed pricing trends. That still is a big focal point of the report, but we also talk about trends related to other features of these grid-connected distributed systems. The current edition of the report focuses primarily on systems installed through the end of last year, though we do have some preliminary data for the first half of 2022. This report also, it covers, in addition to standalone PV, paired PV plus storage systems, and that's something that we've focused more and more on in recent years, as those systems have become a more significant part of the overall distributed PV market. The report, it describes trends related to a variety of project characteristics, things like system size, component selection, ownership, customer segmentation, and a variety of other details. The report also describes trends in median installed prices, both nationally and at the state level, including, as I mentioned, some preliminary data for the first half of this year. And then in addition to talking about kind of the median price trends, we also spend quite a bit of time kind of unpacking the variability in pricing that exists across projects and trying to understand some of the drivers for that variability, relying on both descriptive analysis as well as a more formal econometric and multivariate regression analysis. The box on the right-hand side just mentions some of the other accompanying data products that we issue along with the report. So those include a narrative summary brief. The report itself is a PowerPoint deck, not all too different from the slides that I'll be presenting here today. We also have a data visualization tool that allows users to play with the data themselves and cut it in different ways beyond what we're able to do within the report. We've also posted a public data file. So I'll talk more about the underlying data that we rely on for this report, but it involves a data set of more than 1 million individual PV systems with data on each individual system. And we posted a version of that data set online that contains just the information that we're allowed to make public. And then last, we also have published an Excel file that includes a whole variety of summary tables and figures based on those that are in the full report. So if you want to actually see the numbers that are being plotted in a lot of these figures, that's often the easiest way to do so. So with that, let me get started. First, I want to just talk a little bit about the underlying data and some of the basic kind of methods that we use in assembling this data. So as I mentioned, Tracking the Sun relies on project level data for individual PV systems installed in the US. That data come from a variety of different sources, state agencies, utilities, and other organizations that administer PV incentive programs, REC registration processes, and interconnection processes. Some of the data that we use is already in the public domain. Many of you may be familiar with, for example, California's interconnected applications data set with all sorts of details on systems installed in California. Some other states have similar data sets out there. And so basically we assemble all of this data. Some of it is public, some of it is not, clean and collate it all together into this kind of single data set that then kind of forms the basis for much of the analysis in the report. In total, 66 different organizations across 30 states contributed data to this year's edition of the report. And in the appendix of the report, we list all of those individual organizations. A few key definitions. Throughout the report, we break the customer segments often into 3 different groups: residential, which kind of speaks for itself; small non-residential, which are non-residential systems less than 100 kilowatts; and large non-residential systems, which are those larger than 100 kilowatts, and if they're ground mounted, up to 5 megawatts. And so we don't include utility scale systems. LBL has a separate report that our colleagues just released a couple days ago, focused on the utility scale market. We're really focused on the distributed market with this kind of 5 megawatt cutoff, at least for ground mounted systems. The units throughout this are based on real dollars. And we'll talk a little bit about what that means in light of recent inflation. And all of the capacity data is denominated in DC watts. And I'll talk a little bit more later about this installed price terminology. So here we see the sample for this year's version of the report compared to the full market. So the blue bars in the figure here show the total annual installs within the US. The kind of darker brown bars in the middle represent our sample, which comprises about 77% of the total market cumulatively through the end of last year. And then the beige bars represent just a subset of our data sample that we use when looking at trends in installed prices. And I'll talk more later about kind of how and why we subset our data for that part of the analysis. So first, I want to talk about just some basic kind of characteristics of the PV systems in our data set. So first, looking at system size trends. On the top, we show the trends in median residential system sizes over time, where you can see that those systems have been steadily growing over the past 2 decades, reaching a median of 7 kilowatts last year. That growth is driven by a variety of different factors. Certainly the fact that PV has gotten cheaper has enabled customers to install bigger systems. Modules have also become more efficient, as we'll look at on the next slide. And that can be important in space-constrained applications where customers are limited by the amount of roof space. And so more efficient modules allow customers to put more kilowatts on a roof of a given size. There is, however, as you can see, quite a bit of spread around that median. So most residential systems in the data set fall somewhere in the kind of 4 to 10 kilowatt size range. On the non-residential side, in the bottom figure, you can see that system sizes have also generally risen over time, though they've certainly flattened off quite a bit in recent years. The distribution in system sizes for non-residential systems has a very long upper tail, which is indicated by kind of the asymmetric percentile bands around the median. And so you can see, for example, that the median non-residential size was pretty small, just 33 kilowatts last year. But the average system size was 255 kilowatts. So obviously there are, even though they're small in number, those large non-residential systems certainly dominate the sample when looking at average system sizes. I mentioned module efficiencies have risen over time. We see that in the figure on the top here, in particular the lines which show median module efficiencies within our data set, which have risen to about 20% as of last year. Part of the reason for that ascent is that monocrystalline modules have really kind of taken over the market, and you can see that by the bar charts, which correspond to the right-hand axis and show that anywhere, depending on the market segment, between around roughly 90% and almost 100% of systems installed last year used monocrystalline modules. There still is some distribution around those medians. We show that in the figures on the bottom. And so for the most, in the residential market and really all three market segments. Most module efficiencies fall somewhere in the range of 19 to 21%. On the non-residential side, though, you do see a bit more of an extended tail on the lower bound, where there are still systems being installed with 16, 17, 18% efficient modules. Third-party ownership trends are shown on this slide. In the residential segment, you can see how third-party ownership has really continued to slide in market share, down to about 28% of the total market last year. That's relative to a high of almost 60% back in 2012. So in effect, TPO has sort of fallen in market share by a factor of about a half from its high a decade ago. And really that mostly just reflects the emergence and prominence of residential loan products, which now dominate the market, particularly the host-owned segment of the market. Within the non-residential customer segments, the TPO trends are not as dramatic, and in particular, you can really see that they've been pretty flat. There's obviously some kind of vacillation from year to year, but there isn't nearly the kind of obvious downward trend there that we see on the residential side. At the state level, TPO shares vary. We see that in the figures on the bottom. And in some states, still as much as half or more of the market is third-party owned. For the most part, that tends to be the case in states with relatively significant rebate or incentive programs or relatively high solar rec or SREC pricing, as we see in DC, Massachusetts, and New Jersey in particular. So within the report itself, we walked through trends along a number of other dimensions. In the interest of time, I'm going to skip over that here, but I did just want to note some of the other materials so that it exists in the report if you're interested in it. And so within the report, we look at differences in system sizing by state. We look at trends related to the growth of module level power electronics, including microinverters and DC power optimizers. We look at trends in inverter loading ratios. So that's the ratio of the module DC nameplate rating relative to the inverter AC rating. And we look at how those ratios have changed over time and how they also differ depending upon the type of inverter being used. We look at trends related to ground mounting and tracking, and that's certainly most relevant and prevalent within the large non-residential segment. We look at trends in panel orientation, so whether we see customers and installers sort of increasingly installing systems with more west-facing panels rather than south-facing panels. We don't, in fact, see much of that trend, but within the report, we kind of show that more explicitly. And then last, the report also talks a little bit about trends in the customer segmentation on the non-residential side. So, how much of the market consists of for-profit commercial businesses versus nonprofits and schools and government facilities and other types of non-residential building types. So we have some additional details there. So I want to turn now to looking at characteristics of paired PV plus storage systems. And so this is actually kind of a new element in this year's edition of the report. In previous years, we've included a little bit of material on paired systems, but for the first time this year, we really expanded a lot of that material and dove more deeply into some of the kind of characteristics of those systems. So just to start, I wanted to present some trends in the attachment rate. So this is the percentage of PV systems installed each year that include storage. And you can see those trends over time in the figure on the top. For residential, the trend has really been increasing sort of linearly almost since about 2016. And as of last year, roughly 10% of all residential systems included storage, new residential systems. On the non-residential side, the trends are a little bit less clear and are lower, with about 5% of systems installed last year, including storage. These attachment rates vary quite a bit from state to state. The figures on the bottom show that for at least the subset of states where we had adequate data. And you'll note that the y-axis for both figures is broken so that we can include Hawaii in the charts, because Hawaii is really in a category of its own in terms of attachment rates. More than 90% of all residential systems and almost 60% of non-residential systems in Hawaii last year included storage. And that is primarily driven by some of the net metering reforms in the state that incentivize customers to install batteries in order to maximize their own self-consumption of solar generation. California is the largest state in terms of just the raw number of paired PV plus storage systems, and also has relatively high attachment rates, about 11% on the residential side and 5% on the non-residential side. And those trends are driven in part by rebates for storage in the state through the self-generation incentive program, as well as persistent and increasing concerns around grid reliability. You can see some other pockets of activity in the residential market. For example, Massachusetts, New York, Texas, and Washington all have relatively high attachment rates. And on the non-residential side, Massachusetts really stands out with almost 10% of non-residential systems installed last year, including storage. And that's really driven by the state's SMART program, which includes a bonus incentive for projects with storage. So I mentioned Texas as being one of the markets with sort of particularly high levels of activity last year. It's now a year and a half out of the news cycle, but many of you may remember a little winter storm event that hit Texas in February of 2021, Winter Storm Uri. And in sort of following that event, we see quite a bit of increased uptake in solar plus storage. And the charts here show data specifically for two of the larger distribution utilities in the state, CenterPoint, which serves Houston, and Encore, which serves the Dallas-Fort Worth area. In both of those utility service territories, we saw significant growth in interconnection applications for paired PV plus storage systems last year, about a 3x increase for CenterPoint and a 6x increase for Encore. Correspondingly, attachment rates rose in both utility service territories, with about 14% of all PV systems in CenterPoint's territory last year, including storage, and 24% of the applications that were outstanding as of the end of last year, including storage. So we don't have data yet, obviously, for the entirety of 2022, but those data for kind of the pending applications provide a little bit of a leading indicator for what we might expect to see once all the data is in for this year. Now, in talking about attachment rates, we're obviously focused on co-installed systems, so systems where PV and storage are installed together at the same time. But there's also a significant fraction of the market that consists of retrofits, so storage systems that are added on to pre-existing PV systems. And the figures on the top here show how the retrofit share of the market has kind of evolved over time, and more or less within both the residential and non-residential markets, you can see that between 10 and 20% of the overall market consists of retrofits in any given year. Last year, for example, it was 15% within the residential market and about 9% in the non-residential market. The figures on the bottom provide a little bit of a state level breakout. In particular, we just wanted to show that at least on the residential side, the retrofit market is really centered in California. About 20% of all paired systems installed last year consisted of storage retrofits onto existing PV systems. We don't see nearly that same level of activity in other states. So to some extent, that the retrofit market is somewhat of a California phenomenon, at least at present. So here we present a whole bunch of data on system sizing for paired PV plus storage systems, residential paired systems. There's a lot of information here, so I'm just going to kind of walk quickly through each of the figures on the chart on the slide. So the figure on the upper left-hand side just shows the distribution in storage system sizes for paired residential systems last year. And the feature that I'll just draw your attention to is the spikes at 5, 10, and 15 kilowatts. And that's just as an indication of the fact that most of the residential batteries that are being sold on the market today come in 5 kilowatt increments. And so you see either single 5 kilowatt battery systems, dual 10 kilowatt systems, or 15 kilowatt systems with 3 batteries. The figure on the upper right shows kind of how the breakout among that battery sizing distribution has evolved over time. And the trends there are quite clear and telling. And in particular, they show that the residential market has really been moving towards larger battery sizing in these paired applications. So almost half, 42%, of all paired residential systems installed last year included at least 2 or more 5 kilowatt sized storage units. And that trend, I think, is safe to say, is safe to attribute to growing interest in backup power needs, where having a larger battery system can be especially useful if you are expecting to encounter multi-day outages during summer months on a recurring basis. So that's certainly a big driver in what we see there. Figure on the lower left shows PV system sizes in these paired applications. And I think the trends there are kind of straightforward and pretty intuitive. Systems with larger batteries tend to have larger PV systems, and that's not surprising. And then on the lower right, we show distribution in battery durations. And really, the trends there are driven primarily by the 2 kind of dominant products on the market, the LG Chem Resu 10H, which has 1.9 hours of storage, and the Tesla Powerwall, which has 2.7 hours of storage. And so because those 2 products kind of really dominate the market, at least in terms of what was installed last year, most of what we see consisted of systems with somewhere between 1.5 and 3 hours of storage duration. Here we show a similar set of charts for non-residential systems. I'm not going to go through each of these. I did, however, want to just highlight the figure on the upper right, which shows trends in storage sizing for paired non-residential applications. And this figure here is interesting, really as a counterpoint to the analog on the residential slide. Whereas in the residential market, we see a trend towards larger storage sizing in paired applications. We see kind of the opposite trend on the non-residential side, with more and more or larger and larger share of the market consisting of systems with relatively small, less than 10 kilowatt batteries. And the driver there, or at least my sort of interpretation of the trends, is that the market is kind of moving beyond a focus on just large C&I customers that are focused on storage for demand charge management, and is moving increasingly into smaller applications, smaller C&I customers who are using paired PV plus storage for other purposes beyond just demand charge management. And it's for that reason that we kind of see this trend towards smaller sizing on the non-residential side. So with that, I'm going to now move to the kind of installed price related material. Before doing that, though, I want to just provide a little bit more background and kind of definitional context on this data and kind of what we're doing with it. So first, just in terms of the definitions, what do we mean when we talk about the installed price? For the purpose of this report, the installed price refers to the upfront price denominated in dollars, real dollars per watt DC, paid by the PV system owner prior to receipt of any incentive. So this is really the gross or pre-incentive price. And potentially it includes any upfront loan financing fees that may be passed through the installer. And I'll talk more about that in a few slides. But that's an important potential element that's getting kind of embedded in these aggregate reported prices that we're describing. A few other important considerations: that these are self-reported data by PV installers and customers. Depending upon the particular data source, there may or may not be processes in place to validate those data. But suffice to say, there's some inevitable and irreducible noise in the data, just given its self-reported nature. The data are also historical, based, as I mentioned, primarily on systems installed through the end of last year. And for that reason, they may not be representative of system pricing for systems that have been installed more recently, or particularly current quotes for prospective projects that haven't been installed yet. And then lastly, and importantly, our analysis of installed pricing trends is primarily focused on host-owned, so not third-party owned, standalone PV systems, so excluding systems with storage. We do have a slide that actually does present installed price data for systems with storage, but with the exception of that slide, we're really just focused on standalone and host-owned systems. And we do that primarily just to maintain some semblance of apples to apples comparability across these systems, though obviously there are a whole variety of reasons why the systems can differ from one another beyond just those two factors. Should also mention we exclude self-installed systems. So with that information in mind, here are some figures showing trends in national median installed prices over time. The figures on the top show over the long run, median installed prices have fallen by an average of about 40 cents per watt per year on average over the kind of full time frame of our analysis, so basically the past 2 decades or so. But really the dominant trajectory, I would say, over the past maybe 8 to 10 years has been this kind of steady decline of about 10 to 20 cents per watt annually. That's really the kind of the steady state trend that we've seen since about 2013. And the significance of that year 2013 is that was really the year when the kind of big drop off in global module prices kind of came to an end. And you can see that in the figures at the bottom with the lines and with the solid dots showing global module prices, where there was this period of really precipitous declines. And then since about 2013, it's been a much more gradual trajectory. And we see that reflected in the system level prices at the top. Just looking at the last year of our analysis period from 2020 to 2021, prices continued to fall across the different market segments by about 10 or 20 cents per watt. So that's maintaining that recent historical trajectory, and that's in real dollar terms, so after adjusting for inflation. Here we show some preliminary and partial data for just the first half of 2022. Obviously, supply chain constraints and inflation are in the news, and we would certainly expect those factors to impact system pricing in the more recent history. And to some extent, we see that here. So the figures on the top show installed prices by 6-month interval, starting in the first half of 2021 through the first half of 2022. And you can see, and we show those trends in both nominal terms and real dollar terms. So in nominal terms, prices in the residential market did in fact rise, as they did for large non-residential systems. They actually dropped in nominal terms for small non-residential systems. When we adjust these prices for inflation, we generally find that prices in the first half of 2022 were either flat or declining from the previous year, depending on the market segment. The figures on the bottom show just the changes in median prices from the last half of 2021 to the first half of 2022 for a selection of states. And you can see kind of mixed results there, though, at least on the non-residential side, most states did show a continued decline in pricing. Now, the results here are somewhat mixed and in some ways kind of clash or conflict with what we know about supply chain constraints and inflation putting upward pressure on pricing. And I think, it just points to some of the complexities in how those dynamics ultimately manifest in the prices that we see for projects that have already been installed or installed recently. And, in part, we're making these inflation adjustments, which kind of implicitly capture some of these supply chain constraints. In addition, there is a natural lag in the data where, especially on the non-residential side, if you're looking at systems installed, even in the last 6 months, for larger projects, those may be based on contracts that were signed a year or two ago, and so may kind of predate some of these more recent inflationary pressures. And then last, there's just this kind of question of like how much of those price increases ultimately flow through to the final consumer versus just being absorbed upstream within the supply chain. So for all of those reasons, the picture that we see here doesn't necessarily kind of correspond exactly to the kind of general understanding of the existence of these supply chain constraints and inflationary pressures. So here we look at install price trends for paired PV plus storage systems. So this is the one and only figure where we'll look at install price data for paired systems, and we compare prices for those paired systems to standalone systems. And not surprisingly, we see this in the figure at the top, prices for paired systems are more expensive than for standalone systems. Obviously, there's the additional cost of the battery component that's going to be reflected in those aggregate system level prices. The comparisons here, though, can be a little bit misleading, just given all of the confounding factors that can also affect the pricing levels. We have a regression analysis that I'll present later that controls better for these different confounding factors. And in that analysis, we find that residential systems with batteries cost on average about $1.90 per watt more than those without batteries, than standalone systems. And given kind of typical PV and storage system sizes that we see in the residential market, that equates to about $1,200 per kilowatt hour of storage capacity. And that value comports reasonably well with some of the other kind of market indicators out there that we see for storage pricing. One example is the data that we collect through California's Self-Generation Incentive Program, where storage projects report just the cost of the storage component, including installation costs. And you can see in the figure on the lower left that median prices for residential systems with just a single battery were about $1,149 per kilowatt hour last year, which kind of corresponds pretty closely to that $1,200 number that I cited a moment ago. You can also see in those bottom figures some modest economies of scale, though perhaps not as much as we might expect. Those economies of scale are a bit more apparent on the non-residential side, particularly in looking at some of the larger non-residential systems with more than 100 kilowatt hours of storage. There is a lot of variability in that data, though, as indicated by those wide error bands. So we also compare, just for kind of benchmarking purposes, the median prices that come out of our data set to some of the other pricing benchmarks that exist out there. And there are a whole variety of different sources that we can look to. Some of the large publicly traded installers publish data on average system costs within their financial reports. So we show that for SunPower and Sunrun here. Energy Sage publishes data on the prices for quotes that are issued over their quote platform. And then there are a number of different entities, including NREL and Wood Mackenzie, who publish pricing benchmarks based on their own kind of bottom-up pricing models. And in general, when we kind of compare our median prices to some of these other sources, we see that most of these other benchmarks align more closely with sort of 20th percentile values from our data set. And in general, that's just indicative of the fact that a lot of these sources are kind of a bit more closely aligned with maybe kind of best in class or turnkey type systems that are perhaps more representative of what we might see at the 20th percentile rather than, say, the median system itself. There's also this issue that I alluded to earlier of loan financing fees. So within the Tracking the Sun data set, the prices that we see are kind of all-in inclusive prices that include any dealer fees that might be getting passed through. And those dealer fees, although we don't have visibility into exactly how much they are, we do know just kind of, through kind of anecdotal sources for the most part that they can range anywhere from 10 to 25% of the kind of cash purchase price. And so clearly that can explain a lot of the differences that we're seeing between kind of our median prices and some of these other benchmarks out there. So with that, I'm going to now turn to kind of the final portion of the presentation where we look at variability in installed prices across projects and try to unpack some of the drivers for that variability. Oops, wrong direction. So here we show just the full distribution in system prices for projects installed last year within each of the 3 customer segments. And you can see, across all different customer segments, there's, really this wide distribution in pricing that has persisted over time. And that pricing variability reflects a whole host of underlying factors, differences in kind of project characteristics, differences in the installers, their pricing strategies, for example, and differences in the characteristics of the local PV market and the kind of overarching policy and regulatory context. And so throughout the report and also in a variety of other kind of studies, we've kind of explored some of the reasons for this pricing variability. And I'll go through a little bit of that material now and kind of provide a nod to some of the factors that are affecting this pricing variability. So first, just looking at differences in system sizing among residential systems, you can see in the upper left-hand side a pretty significant difference in pricing just across, between a relatively small residential system and a relatively large residential system. So across the extremes, it's about $1 per watt difference between, say, a 2 kilowatt system and a 12 kilowatt system. On the non-residential side, system sizes vary across an even wider range, and correspondingly, PV system prices do as well, with about a $2 per watt difference between the smallest non-residential sizes and the largest non-residential sizes in our data set. So just system sizes themselves, that's one of the big drivers for the overall variability in pricing that we see. There's also quite a bit of pricing variability across states. Those differences are, I would say, especially pronounced in the residential sector, where last year we saw a range in median prices from $2.90 in New Hampshire to $4.80 in Rhode Island. Some of these cross-state pricing differences are, I would say, kind of the result of idiosyncratic features of the data. So you might have, relatively small state markets that are dominated by, one or two large installers that kind of report somewhat strange prices, and that can really swing things for that state. But there are also, beyond those idiosyncratic differences, a whole host of more fundamental market and policy related factors that can drive these differences. And within the regression model that I'll present in a couple slides, we can see how some of those kind of market and policy related factors can contribute to these cross-state pricing differences. Lastly, we also see quite a bit of pricing variability across installers. And so the figure here, it is based on just the top 100 residential installers last year. Each dot in the figure corresponds to an individual installer and represents the median price for that installer. And we've ordered the installers from the lowest to highest median install price. And then the shaded band just shows the percentile range for each of those individual installers. And so you can see, kind of looking across this kind of distribution, that there are these outliers at the extremities, but ignoring those, the vast majority of installers kind of fall somewhere between $2.50 and $5 a watt, with most installers actually registering median prices above $4 a watt. Now, there are a whole variety of different reasons why installer level pricing can differ. Part of it may be just the level of experience of installers. More experienced firms may have just figured out how to do things more efficiently. They may be larger and may be able to benefit from certain organizational economies of scale. And within the regression analysis, we actually do look at that, and we find about a 14-cent per watt difference between installers with relatively low levels of experience and relatively high levels of experience. So that's one driver, but you can see, just given the wide range, it's obviously a pretty small part of the overall range that we're looking at here. There are other firm level characteristics that certainly could be driving some of these differences. Differences related to equipment preferences. So certain installers might have particular vendor relationships, maybe with premium efficiency module suppliers that could result in higher cost systems. Installers may just also differ in terms of their individual pricing strategies, their business models, whether or not they tend to sell loan finance systems and what the loan financing fees associated with those loans are. So those factors, many of which are not really readily observable within our data set. Lastly, I would just note that many of these firms operate within particular geographical regions. And so some of what we're seeing here that shows up as firm level pricing differences may really just be kind of regional price differences that are kind of embedded in these firm level prices. So very quickly, I want to just summarize some of the results of the regression analysis, and then we'll turn to the Q&A. So as I mentioned, in addition to just kind of cutting the data in different ways in order to show how prices vary, we also ran a more formal multivariate regression analysis with the set of variables listed in the table here. I won't talk about the coefficient results in the table, but those are really the kind of the primary regression outputs. And you can see that the variables include a variety of factors related to system characteristics. So, size, module type, inverter type, etc. They include a variety of features of the market. So kind of how concentrated or competitive is the market in terms of the number of installers, the overall size of the market, population density, income levels. And then lastly, we, as I mentioned, looked at installer experience as being another potential driver. So kind of this is the model. This figure here is sort of our attempt at synthesizing the results of the model and really showing how each of these individual variables contributes to the overall pricing variability, given the variability that exists in the individual variable itself. And so you can see, looking at for example, the system level variables in the top, many of those can contribute to pricing differences on the order of 40 to 50 cents per watt. Obviously, battery being an even bigger driver, with about $1 per 90 cent per watt pricing effect. The market related pricing drivers, so market size, installer concentration, household density, and incomes, those, in many cases, we found statistically significant effects, but they were just relatively small. So typically on the order of, less than 20 cents per watt in terms of the effects that those ultimately had on the overall pricing variability. And then lastly, at the bottom, with the wide gray bars for the state fixed effects variables, that just indicates that there's just a really wide variation in prices that exists across states above and beyond the effects of those factors that we've explicitly modeled above. And that sort of residual state level pricing variability can reflect a whole host of other kind of local and regional factors like the cost of living, retail electricity prices, incentive levels, solar insolation levels, kind of the burdensomeness of local permitting processes, factors such as that are just sort of embedded in these state level fixed effects, but that we haven't really been able to explicitly break out. So with that, I'm actually going to stop talking here. We've got a little over 10 minutes left for Q&A. Naeem, I think, has been assembling some of those questions in the background, so I'll hand the mic over to him. And as he starts going through the questions, I just want to remind all of you of the website at the top of the page, trackingthesun.lbl.gov. That's where you can go to find the report, all of the supporting documentation, and then ultimately a recording of this webinar as well. So Naeem, I will hand the mic over to you to share some of the questions we've received.
Great, thank you. Thanks for that presentation. And that was one question, is where can we download the report? So thanks for that. We received a question on the high storage attachment rate in Hawaii, and if there was any particular reason why the storage attachment rate was so high in one of those first slides.
Yeah, so I mean, I kind of breezed through the explanation there, but as I kind of mentioned very quickly, Hawaii has been transitioning away from net metering, and in particular, they've moved to kind of a successor set of tariff structures, and there are a couple of different options. There's one option that really essentially requires that customers entirely self-consume their solar, and so to do that, you really need a battery. There's also another option, which is also popular, which where customers are allowed to export, but the export credit rate is well below retail rates, and so that provides more of just a financial incentive for customers to install storage so that they can sort of absorb those exports and self-consume that solar energy later on. And so it really, just in a nutshell, in Hawaii, it's really primarily been driven by net metering reforms and this kind of move away from allowing full retail rate credit for exported solar generation.
Great. So there are two related questions. One is just kind of general steps to clean the data. So what the general steps are, and the other one is how does the data quality on battery storage compare to solar?
Okay, those are good questions and hard to answer. So on the just sort of what is our data cleaning process? It's a relatively involved process. I actually have I think, a slide here. So this slide here kind of walks through some of the key steps in our kind of internal data cleaning process. So, we receive data from all of these different entities. It's typically in the spreadsheet type format. And so, our first step is just to standardize the structure of the data, get it all sort of organized into a common set of column headers, and with kind of common definitions and conventions in terms of how different data fields are defined and denominated. We then kind of go through the set of steps outlined on the slide here. There's a lot of cleaning of text fields, in particular fields for installer name, the module and inverter name. So that data those data come in, and the spelling is sort of all over the place. And so we have a process in place to kind of standardize the spelling of those data fields, and then kind of associate the data with spec sheet data sets, essentially, so that we can bring in information on module efficiency and inverter power rating. We can flag systems with microinverters or DC optimizers. So that's a big part of the process. And then just kind of converting a lot of the dollar and kilowatt numbers. This is sort of the tip of the iceberg. We could talk for a long time about just sort of all of the details, and those details can differ from one particular data source to another. For California in particular, we have a very involved data cleaning process, just given how important California is as a large part of our overall data set. I think there was also a question, Naeem, about the quality of the storage data quality versus the PV data quality. I think that the data quality, I would say, is maybe comparable. I think many of the entities that are providing us with data don't have as much history or experience in collecting storage data. So I think some of the conventions there are still sort of maybe less well established. I think the biggest difference is just the richness of the data. So whereas on the PV side, it's quite common that we'll get data on not just the nameplate capacity of the PV system, but the manufacturer, model number, the quantity. For storage, often we don't get those pieces of information, and sometimes we don't even get the size of the storage system. And so the biggest issue, I would say, is just sort of the completeness or the depth of the data.
A couple more questions on data. One is relatively quick to answer. It's just you mentioned another data source of pricing, perhaps the data that makes up this report, is available online. Is this available to us?
So we publish our sort of the public tracking the sun data set, which contains sort of all of the public data sources that are out there. So the California data, New Jersey data, New York, Massachusetts. I mean, many of the large distributed solar markets, they have the state agencies in those markets publish kind of public data sets. So we collate all of that, and that feeds into our public data set. Our data set also includes a variety of data sources that are not otherwise public, but where the data providers have given us permission to make it public through kind of our data set. So that's available online at trackingthesun.lbl.gov. It's a large data file. Naeem, I mean, you can probably talk more authoritatively about the details of that data file, but it's downloadable as a zip file. There's a CSV file. It's got, I don't know, probably close to 2 million individual records in it. And there's a README kind of data guide associated with that file that explains what each of the data fields represents and provides kind of key sort of notes and interpretations.
Indeed. It's less than 100 megabytes, but when you unzip it, it's I think above 1 gigabyte. So it's a pretty big file. Great. So there's a question. Can you explain the differences in the Berkeley Lab and California data sets, in particular, what extras we may find in the California, as well as the lag time in LBL data set?
Mm-hmm. Yeah, so that's a great question. So for California, our California data primarily comes from the CPUC, the California Public Utility Commission, and their kind of DG Stats website. So those that are familiar with that, you'll know that there's, I think it's, I'm not sure actually what it's currently called. At one point, it's called the currently interconnected data set, but it's essentially a data set containing every single DG interconnection application for the state's 3 large investor-owned utilities. So that data set feeds into our data set. We publish our data set once a year. They publish theirs kind of more or less monthly, I would say. So certainly you can get more updated data for California through the CPUC's website. We do, however, perform a number of cleaning operations that folks might find useful. And I'll mention 2, though there are others. One is that the system size data that the utilities report is kind of a mishmash of both STC and PTC ratings. So some of you may be familiar with the PTC is the PV+ test conditions. It's an alternate sort of rating convention for PV modules that is lower than the STC rating. And so depending on the utility and on the year, the data might either be STC or PTC. We standardize it all to STC. Another thing that we do is that we collapse rows of some of the utilities, in particular, San Diego Gas and Electric. Their PV and storage records are all on separate rows, and there's no way within the public data set to associate a storage record and a PV record installed at the same site at the same time. Because we get addresses, those are not public, but those addresses allow us to associate those records and basically identify paired PV+Storage systems in a way that you couldn't do in the public data set. And I would say that's a bigger deal for SDG&E than for the other utilities, though to some extent that is also the case for the other utilities as well, where we're able to more completely identify paired systems. So that was a bit of a ramble, but just is an example of some of the kind of in the weeds data cleaning that we perform in the process of pulling this data set together.
Okay, well, I think it's actually the top or the bottom of the hour. There are a few more questions, and we'll try and get back to you by email if unless you ask your question anonymously.
Great. Well, thanks, Naeem, and thanks everybody for joining. Yeah, apologies again for not getting through all the questions, but I'll look through those and we'll respond to those who I can. And of course, feel free to send us emails as well if you have additional questions. Our email addresses are listed on the slide here, and of course are easily Googleable. So thanks again, and we look forward to seeing you all virtually on the next Berkeley Lab webinar. Take care. Bye-bye.